Good evening, and welcome back to another video of Grey Man's Profits for beginners. Today is the second part in pattern recognition for beginners. So, let's get into it. Once again, same as the last video, I have two patterns for bullish and bearish, and two patterns that reflect each other. So, they work inversely. But what you will notice is that I've drawn yellow lines around all of these patterns for a reason. And what we're studying today is basically a breakout out of a consolidating pattern. In other words, it reaches outside of the zone and reacts. So let's get into it. The first one I want you to familiarize yourself with is actually the bullish channel. So this is quite easy to analyze, and you'll see it in the market quite frequently. The one thing is, these are not indicators of large breakouts, but more breaks of structures, so that you can indicate and go, okay, I can analyze why this has happened. So, this here, all the ones that I've shown here, are examples of AMD. And what does AMD stand for? Well, it's what I listed in one of the other videos, but it is accumulation, manipulation, and then finally distribution on a small scale. So let's get into it. So what you'll see is this first one for the bullish channel is that the first movement is in a bearish downfall. So we go from higher highs to higher lows to, let's go, lower highs to lower lows to lower highs again to lowest low. And the reason that I've indicated this is because instead of following the pattern of following this downward bearish trend, it has broken through the accumulation line. So these are flowing down and accumulating volume. Once it's broken out of here, it has manipulated the accumulated volume here and then retest back into this demand zone, which was currently the apex of these nodes on the downfall. One of the things that you'll have to watch out for in this pattern is that the downfalls and the peaks remain basically the same size. While they might vary a little bit, if it remains consistent, you're most likely going to be looking at a type of channel. Okay, let's continue. So, it has rised up quite quickly and left this breaking of structure and gone further. It has gone back into the demand zone and then skyrocketed back up in the same fashion as it did here, creating a bullish movement. This is unique because this shows the full factors of AMD on a small scale: accumulation, manipulation, and then finally distribution, so that it is skyrocketed up. Now, if you were to take a trade off this, how would that look like? So, a lot of people would say, oh, well, that's obvious. Why don't you just take it from here? The only problem with that is that you don't actually know that it is going to be a break of structure. You could continue that motion and go, oh, okay, I'm going to either catch the small rise before the fall, or go, I'm going to buy here in hopes to continue the movement. That's very risky. It could be an option, but it is risky. So, what will happen is that you could try and catch this and then get deterred when it starts to fall back down, because there's no realistic explanation that it's going to stop in this demand zone. It might halter a little bit, but the wicks will come further down for a candle and then skyrocket back up. If you were smart, you wait for it to come back into this demand zone and then set a price. where you can place a bet or a trade from here. That would be the safer option. But you have to analyze the situation and use your head a little bit. Okay, the next one is exactly the same as here, except in the opposite direction. And once again, it is the perfect example of AMD. Get that into your head and you will never be confused again in trading. Okay, so it is following in a bullish trend at the start. So it's going from lower lows to lower highs to, let's say, medium lows, medium highs to higher lows and higher highs. And instead of continuing this process, so you'll see this quite frequently, accumulating volume. And then once it passes this line for the nodes, or basically the demand zones, it has broken structure, BOS, or maybe an MSS, depending on how severe it is. So we've got a huge rush of cells that happen, and this might be over 5 minutes or maybe even on the 1 minute time frame. You never know. Huge rush of cells, and we get down here and it goes, okay, the volume has released a little bit and there's still a lot of price action pushing down. But what you'll find is that the buyers will often outweigh the sells until we return back into the demand zone to clear any remaining liquidity that has been accumulated here. So A, M, wipe out the liquidity, and then distribute. And this is the movement once again in the distribution that you would like to place the trade. Perfect. Let's keep on going. Okay, the next one I want to show you, and they're inversions of themselves, is, wait, let me angle it a little bit better, the bullish rectangle and the bearish rectangle. This follows exactly the same as what I was saying before. So this will most likely be the last distribution of another movement on a smaller scale. Everything is always AMD if you look at the charts. It's very rarely that you see a move that doesn't apply to that. Okay, so let's assume that this is the distribution of an old movement where there's a huge rush up of buyers. Huge rush up. Now, we've entered this new section where it almost consolidates out, where it goes up and down, up and down. And you'll see this quite frequently where it's the boring stage of watching the charts. We've got nothing exciting happening and you're just watching it. But little by little, volume is increasing and it is accumulating. So up and down, up and down, up and down. And it might happen 5 times, 2 times as I've listed here, or it might happen 10 times. You never know. But the most important thing, let's say, is when it breaks out of this zone. This would indicate, okay, it has risen up, manipulated outside of this automatic demand zone and has reached a higher high. Then the sellers go, okay, let's grab the liquidity that is saved up in the volume. Come and cash grab it down before we can change our direction and continue the movement or idea that we had before and expand on the manipulation. Okay, and that would skyrocket up, and you can either, in this situation, once you see the break of structure break out, you can either place a trade in and go from there. But as beginners, you have to watch out because this can always turn back around. You could have a manipulation and then the distribution could be the other way as well. So wait for the confirmation for it to come back up to make sure that you're in the right direction before making any hasty decisions. Because while these patterns are useful, they're never 100%. There's always exceptions to the rule. Perfect. Let's continue. Okay, so the bearish one. The bearish triangle, is exactly the same as above. Exactly the same. But I will go into a little bit more detail about why this is so important. And I recommend that you drill the bearish and bullish rectangles into your head, because this is exactly what a lot of the session highs and lows look like in the market. So, let's say that you know that it is AMD and following the same pattern. If you were to be, okay, let's say that this is New York from the previous day. Let's say that New York PM has reacted and we've entered and gone into a new day. Slowing down, they've taken all the liquidity out, and this is where Asia wakes up. Asia, standing usually for accumulation. Asia picks up the market and they go, oh, let's fluctuate a little bit. Let's build up the volume so that we can make a move, that we can do something. Okay, they've increased the volume. They've gone up and down, up and down, up and down within these immediate demand zones. And then finally, once volume has accumulated enough, they've gone, okay, let's manipulate. And they have a rush of either buyers or, in this case, sellers. The sellers are all taking advantage of the liquidity that has been built, pushing further and further out of this buy side liquidity or the sell side liquidity that are the highs or lows of the previous session. They've broken out of the previous session highs and lows, pushing down. And then once they've reached those lows, they've gone, let's redeem all the leftover liquidity, pushing back up and going, perfect. Now it's time to do our idea. And they continue with their reversal, or in the opposite direction. But 9 times out of 10, it will continue with the manipulation idea for the distribution. Okay, that would indicate that if you were bold, you could take this trade here. But us as beginners, as I said above, if you wait for the retest into the demand zone so that they wipe out the liquidity, and let's say that they go for the low sides, then you can place your trade here and sell, putting your stop loss somewhere in the middle of this equilibrium, and you'll buy 100 pips further down. That way you can stay sustainable and you don't have to worry. If you master these techniques, you're going to be above and beyond anyone else that's coming across you. You're learning the right techniques. Well, I hope you have a lovely day, and more importantly, be the great man. Bye.